FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is 1/14/20. Hey, World War III came and went in nary a whimper. Amazing how things work. You know, you just can't get drawn into the hype because the hype is always going to make you look for the worst possible scenario. Sometimes the worst possible scenario, worst possible case occurs, but usually it doesn't, only in the mind of the media and other whacked out types that you come across. Well, so now we're post World War III. Let's find out where we go from here. And where do you think we're heading? Let's hear from you. Email us, kl@kerrylutz.com. And John Rubino is with us. So, John, a funny thing happened on the way to World War III. Looks like Iran is on the brink of regime change, perhaps. Finally.
Hey, Kerry. Well, thank God, Jesus. A pan-Middle Eastern war with China and Russia on one side and us on the other side would have been beyond a nightmare. So it's good that this is calming down. And the financial markets are reflecting that. Now you've got the first phase of the China-U.S. trade deal being signed here. And maybe we're not going to war with Iran. So there's a big relief rally going on in the financial markets. Which, people shouldn't get sucked into because the underlying problems are still there. The news cycle thing where you have a big scare and then it turns out not to be so bad. And so the markets tank and soar. And that's background noise to the real stuff that's going on, which is that all the central banks of the world have basically given up trying to control the money supply and raise interest rates to normal levels and stuff like that. We're never going to normalize monetary policy again. It's going to be extremely expansionary forever, and fiscal policy is now getting sucked into that. So that's the big thing, that it's easy money to the horizon, which means debt will continue to soar until it blows up. So that's the main story, and the rest of this stuff, if it doesn't turn into a nuclear war, is just background. And so the main story is still really dangerous and bad from a financial markets standpoint, but which means somewhere out there is this generation's Big Short. With everything valued this richly, we who knows for sure whether this is it. But we're in a situation where in previous cycles, the people who stepped up and really bet against the bubble made fortunes. But in every instance, or in most instances, they were too early and they got burned big time for a while. So let's take one example is Tesla right now, which I have shorted in the past. I've gone in and out and made money 2 or 3 times with those guys. But the last time I thought maybe I would just ride it to zero because it looked operationally like there's no way it could survive. And I didn't. I pulled out, and man, I'm glad I did.
Oh, you would have got crushed. You would have been totally crushed.
Yeah. But Tesla has just taken off. They first of all, they wouldn't have survived if we'd had a recession in the last 2 or 3 years. If things had turned down and junk bond interest rates had spiked and it became hard for them to finance themselves, they wouldn't have gotten through the last 3 years. But because we're in an economy that is growing, sort of, kind of,
on the surface.
Where interest rates, well, where interest rates are low, people are still, buying cars and
still borrowing.
And so Tesla was able to finance itself, and they kind of got over the hump. And now they're killing it out there. They're selling a lot of cars, so they are kind of now looking like the iPhone of the electric car market. In other words, their product is the defining product that everybody looks at. And there are other players in that market, but these guys are central.
Yes.
And now they're opening a factory in China, which is a huge market for electric cars. So the financial markets are rewarding them for it. Their stock is 517 right now.
Madness,
I closed out a short in the 200s. Oof. A couple of years ago. And and so they're just rocking right now. And it's, it's possible they're over the hump. There's no way to know for sure what happens in the next recession with a company like this. But
well, one thing you got to look at, the auto industry's already been in a recession. They sold less cars in 19 than they sold in 18, and they're on track to sell less cars in 20 than they sold in 19. So ostensibly, they might very well be in a recession already, and yet Tesla's sales are going up. And obviously, it's easy money. It's actually the total cost of ownership of a Tesla now is less than owning a Toyota Camry, which is probably amongst the most reliable and least cheapest cars to run. And when you look at that and you say, maybe there's something to this.
Well, two things about that. One is, one of the original bubbles in this cycle was subprime auto loans. In other words, the car companies generated record sales by lending money to anybody with a heartbeat who showed up at a dealership. And that's a strategy with a limited lifespan. You can do that for a few years, and then you run through even the really low quality borrowers and your sales fall. And so that's what's happening with the conventional car makers right now. They generated huge sales by pulling future sales into the current year, and now they're paying for it. Tesla or electric cars in general kind of exist apart from that because they're sort of kind of a novelty thing still. So, if you have a lot of money, which, one segment of the population, the one that owns financial assets and is being further enriched by our crazy monetary and fiscal policies now, they don't have to worry about borrowing to buy cars or anything. And they're really attracted to novelty because they already have all the regular stuff, right? So the fact that, they own a Porsche or a Mercedes or whatever doesn't stop them from buying a Tesla because that's a completely new concept. And so electric cars now are benefiting from the fact that we've got a segment of the population that's really rich and willing to buy stuff like that, even though they don't need something like that. And which is how a new thing usually gets introduced into society. Some new technology comes along and it's really expensive and it's imperfect, like the original cell phones, for instance. And most people wouldn't buy one in that form at that price, but the rich segment of the population says, yeah, let me try one of these. This is cool. I can show it off to my friends, even though it doesn't work great and it's expensive. I don't care about those things. I just want to have the newest thing. And so they create the market, which allows the producers of those things to build bigger factories and have longer production runs and generate economies of scale and push prices down until the thing becomes mainstream. And that's where electric cars are now. Yeah. They're generating rising sales, especially Teslas. And that creates the kind of economies of scale, which leads to mass market pricing and then makes something mainstream. So it's interesting to watch this happen. And, you've driven Teslas before, so electric cars are way more fun to drive than regular internal combustion engine cars. So once they're, a financially decent deal for the average car buyer, no comparison, there will be a huge demand for electric cars out there. And Tesla may be the vehicle for that transition. So that's really cool, That doesn't mean they aren't a great short again here, because man, this was a parabolic run. This price just went straight up.
Totally.
And that very seldom ends well, especially for a new technology, because now Tesla's got competition coming in. Porsche is introducing their quote unquote Tesla killer this year, and it'll be interesting to see how a company with basically unlimited financial muscle and a lot of expertise in fast, stylish cars can do in this market. And if they end up producing something that's viable, then we have some real competition here. Then it gets interesting. But right now, Tesla is kind of the only big game in town in the electric car market, and they're definitely benefiting from it.
Agreed. Well, the Tesla killer, the Porsche, is going to be 180,000. So it's a little bit it's up there, and there's issues with it. Tesla has got the lead.
Yeah,
Tesla
they definitely
has gotten the lead. And that's a key thing. I believe like it doesn't always give you the advantage first, first mover, first entrant into the market, but it can. And in this case, they seem to be so far ahead of the competition. I don't know where how the competition catches up unless they make a major blunder, which could happen. Let's face it.
FSN Radio. It's all about what's next.
Trilogy Metals is a world-class developer in Alaska's Ambler mining district. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold-equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
The Financial Survival Network. It's all about what's next.
Yeah, and then there's the statistical side of this. If you have 20 new competitors come in to a market, there's a decent chance that a couple of them are really innovative and have a decent chance of taking big market share. That's how capitalism works. Instead of bringing a few experts together to solve a problem and then locking that solution into stone, you have a bunch of entrepreneurs coming in with crazy ideas, 90% of which fail miserably, but 10% of which turn out to be brilliant. And you can't know ahead of time who that's going to be. So that's the process now in electric cars, where you got a lot of people throwing a lot of different ideas against the wall to see what sticks. And it would be contrary to historical process if none of them worked and only Tesla ended up being able to make great electric cars. I think some other people will end up being able to do it, and there will be real competition in this market. But it's hard to know ahead of time because, look at the computer market to begin with. The biggest names did not end up being the dominant players 10 years after the introduction, for instance, of the personal computer. And it's completely possible that it'll be that way with cars, but you can't know. There's nobody really that you can bet on now as a sure thing in that market. And that's as it should be with the new market. This is fun to watch and really beneficial for society if the components of batteries for electric cars turn out to be acquirable in a green way. And that's still to be decided. It might end up with fuel cells instead of batteries running these cars, which wouldn't make much difference from standpoint of a manufacturer. It's like
it would make them a lot cheaper, probably.
It might. It wouldn't today because fuel cells are more expensive than batteries, but they have a path to economic competitiveness that looks fairly clear. They just have to get better at the basic things that they're doing. It's an engineering issue more than a scientific issue. Mm-hmm. And so that's another aspect of the electric car market that is interesting and completely unpredictable on a company by company basis, but fascinating time to see that happening. It's just when a technology's time has come, then there's really no stopping it. And what's happening with Tesla might be an example of that. It might be the thing that tells you that that's what's happening in electric cars. We'll see.
I think it's critical mass. And I think if we're not there yet, we will be very shortly. And it's going to be difficult for any other manufacturer to catch them. At this point, there's a lot of reasons. But, John, $500 a share, and they're profitable now. But they're selling for more than Ford ever sold for on an inflation-adjusted basis. So is this a case where the market might actually know what it's talking about, or is it just total stupidity?
We'll see. I might short them, though, pretty soon, Kerry. I'll tell you next time we talk if I do.
All right.
But, I might take that chance here pretty soon.
Just remember out there, don't do this at home. This is very dangerous here. We're not telling you to short the stock for sure, but John's a professional, so he can handle it. But
a professional who's wrong a lot of the time. So just because I say I'm going to do something that, in a lot of cases, you might be better off doing the opposite in the short run, because in the long run, things seem to work out, but my timing is usually pretty terrible.
Yeah. Well, John, you've been a pretty astute investor over the years, and my money's on you, but look, this is not for the faint of heart. This is a major speculation. And according to Nick Santiago, when this thing's going to run up to 542, 543, and then the parabellum will have run its course and it's going to crash. So, hey, it's risky business, but because you're betting against, and when you sell short, your potential profit is limited to the price of the stock, but your potential losses are, in theory, unlimited, right, John?
Yes, when you short something. And when you do it with options, you have to pay a really huge premium to buy a put on something like Netflix or Tesla, because lots of other people are making that same bet. So you start off with an instrument that has a negative intrinsic value, and the price of the stock has to fall a lot before you even get to the point where the thing has any intrinsic value. It's all premium, if that makes sense.
All time value, right?
Well, the time value is that's that's built into the premium. But so it has to fall a long way. That's the main point before you make any real money by shorting something using options. But once you get to that point, once it falls, 10 or 15% to eat through a lot of the premium, then you start making serious money. If it falls 20%, you maybe are at long-term break even with that thing. And then if it falls another 20%, you make 300% on the price of your option. So that's how that works. You need to be very right. But if you are very right, you make some huge multiple of your bet. Yeah, and so once that happens a few times, it's addictive. I live for that feeling, and I'll take chances to try to get it back just because I had it a few times.
I know,
and I know what it's like. And but you have to take big risks to have that be a possibility. Sure. And only people who are kind of obsessive speculators should do that regularly, because the chances of losing everything that you put into it are probably more than 50-50 in a lot of cases with put options.
No doubt. Well, another move could be to sell the stock short and buy, an out of the money call option. And, that might do it. But again, premiums are high. There's a option pricing software out there. You can figure out if you're getting a good deal or not. Well, enough of Tesla and all that. But, when you look at what's happening here in the Middle East, and then you look at the economy, jobs are plentiful here. I mean, that's not just hype. I talk to people. Their biggest problem is that they can't find employees, John. There's a real shortage of qualified employees.
Yeah, we've been talking about this for a while. The anecdotal side of this is pretty funny, because you hear about companies setting up booths outside the gates of high schools,
prisons.
We're going to the local jail and seeing who's going to be released and recruiting them and stuff, because they just can't get enough people to do the work that is necessary to satisfy the new orders coming in, and that's. Usually that leads to higher wages, which is great, which translates into wage inflation, which is bad because that scares the Fed and they raise interest rates. But you know what? The Fed is not in any kind of a hurry to raise interest rates right now. No. So we could see higher wages for a while, even at the cost of wage inflation that's 3, 4, 5%. Because the Fed is just terrified of what would happen if they raise interest rates. They found out at the end of, was it 2018? Yeah, it was at the end of 2018 when they had they'd increased interest rates a few times, and the market just went crazy in December. It just tanked. We had like an instant bull market or a bear market, flash crash. Yeah. And the Fed knows that is that's the outcome of any attempt to raise interest rates or normalize monetary policy going forward. So they're willing to accept higher rates of inflation now because they don't know what to do otherwise. They know they can't raise interest rates. They can't lean against inflation. So they're resigned to accepting maybe 3%, maybe even 4% inflation at the consumer price level. We've already had raging inflation in financial assets for a long time. So if we accurately accounted for inflation, we're already in a dramatically inflationary environment right now. But when that starts flowing into the stuff that the Fed measures as quote unquote inflation, then that's a whole different thing. But it looks like they're going to put up with it, which means the labor markets could stay tight for a while. Of course, you never know what out of the blue kind of thing is going to derail an 11-year-old expansion. So something is going to happen. And all of a sudden, we're not growing anymore. That's going to happen out there. But in the meantime, until that thing happens, it's possible that the people are going to keep getting raises and signing bonuses and better benefits because companies have no alternative other than to just turn away business. They need more people and they need to hold on to the people that they have. And that's, as far as it goes, great news. It will end badly because all of the financial trends right now are pointing towards some kind of a huge crisis out there. But in the short run, if you're in jail, your life might not be ruined. You might be able to walk out the door and get hired at a pretty good job.
Isn't that a good thing? Isn't that a good thing, though? Come on. That is a great thing. And as the father of two sons, I love it that they can get jobs out there. Yeah. But, it comes at a cost. You can't be willing to accept higher than normal inflation without the accompanying instability. Once inflation, as everybody defines it, not as it really is, but as the headline number in all the economic reports rises to say 3 or 4%, then all of a sudden the financial markets start flaking out. Because what good is a bond yielding nothing if inflation, in other words, if the value of your currency is falling by 4% and you put it into a bond with near zero yield, you're consigning yourself to capital that shrinks at a rate of 4% a year, which means you go extinct financially in really not that long a time. And nobody puts up with that except under real extreme circumstances. The only reason you would do something like that is if you are so terrified of the world that you're willing to prioritize return of capital over return on capital in a big way. And you're willing to accept a real loss of 4% over time because you're afraid of much bigger losses. And in that kind of a world, risk on doesn't make much sense, right? It doesn't make sense to buy risky assets like stocks and junk bonds when the bond markets are so terrified that they're willing to take a negative 4% return. We're headed for that. That's going to be the structure of the global financial system. And it already is in some places. I mean, there are places where people are willing to take a negative yield on bonds. And that's in an expansion. Wait till the next recession when interest rates by necessity plunge. And if you want to park your money somewhere where you're pretty sure you'll get most of it back, you have no choice but to accept a steeply negative yield. That's going to be everywhere. And so this kind of sense of normalcy now is an illusion with a relatively short time frame, but we don't know what the time frame is. We don't know how long it'll take for that other world where everybody's just so terrified that they just want their money back, even if they only 90% of it back 3 years from now. That's okay. That's better than the alternative. That we don't know when that world is going to come, but it'll come. 11 years into an expansion, when the average expansion is 6 years, you got to think that that other world comes pretty soon. Well, and when it does, our conversations get very different. I just remember what Michael Penta says, Tina, there is no alternative. So that's why the market's going up, because there's no alternative. It's going to keep going up as long as there is no alternative. And really, government bonds, well, that's a whole nother story. Anyway, John, we got to go, but you like what you heard? Check out John's site, dollarcollapse.com. Check out ours, financialsurvivalnetwork.com. The Twitter feed's at Kerry Lutz, Facebook page, Financial Survival Network. Write us with your thoughts. We'd love to hear. What do you think of Tesla? I know, Brian, and it's a bubble, and you've been telling me that, but hey, bubble can get blown pretty big before it pops, and I'm not convinced that even if the stock blows up, that the company's going to blow up with it. We'll see. Email address kl@kerrylutz.com. John, we'll catch you next week.
Thanks, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.